Okay, our first question here is from Bill. He's asking, do I need additional plan documents to open a designated Roth account inside of an existing solo 401k?
That's a great question, Bill. If you have a self-directed solo 401k plan established by Sense Financial, all of our plan documents do come with the Roth provision. That means that you can make Roth contributions. You can take your existing Roth funds from another 401k and move them into a solo 401k Roth sub account, or you can make a Roth conversion.
Okay, next question is from Tanya. How do I roll over an employer-sponsored retirement to my solo 401k? I left the job, but have not retired.
Tanya, if you have a 401k from a previous employer, you can move that into a solo 401k. The process is pretty straightforward. We do have detailed guidance on the client portal. You want to log into the client portal, navigate to the setup section, and then click on the rollover. We have the process spelled out for you, but you will need to request forms for the rollover because since it is an employer-sponsored plan, they will require you to complete their own forms. You can typically do it either online, or you can complete a form and then email it or fax it to them, and then they'll issue a check payable to your 401k, FBO yourself. FBO means for benefit of, and then they'll mail that check to you at the address you designate. Once you receive that check, you will be able to deposit that into your solo 401k bank account. If you're using our preferred bank, Solera, they don't have limit on the deposit, so even if it's a large deposit, a few $100,000 for that rollover, you'll be able to do it just by taking a picture of that check and depositing that into your account.
This question is from Jeremy. What to look for when searching for the right financial institution to open a self-directed 401k or IRA?
Jeremy, the short answer is you already found it. That's what we do, specialize in, and we've been doing this for the last 15 years. We have about 4,000 clients and in the process of acquiring a couple of thousand more. But obviously, most financial institutions do not handle self-directed plans. There is only a handful of them out there. But you want to make sure that they're going to provide you the support after the fact that you established the plan. That's what we've been doing. We got hundreds of reviews online on Google, on LinkedIn, on Facebook, on Yelp, on Better Business Bureau, and Trustpilot. So I think you're in the right place and we can take care of you.
This question's from Tiffany. What are the steps for taking a personal loan from your solo 401k?
A great question, Tiffany. If you would like to take a personal loan, sometimes it's called a participant loan, which if you have a solo 401k, you're eligible to take a loan up to $50,000 for 50% of the balance, whichever is less. The process is pretty straightforward. Again, you navigate to the client portal. You go to the maintenance section and then click on the participant loan. We have loan application and step-by-step instructions how to complete that. It will take you 15 minutes maybe to complete the loan, and then after that you can simply write the check payable to yourself from your solo 401k bank account, write participant loan on the memo line, and then you can deposit that check into your personal bank account and use it as you see fit. Obviously, you have to follow the rules on repayment, but again, you can find that in the client portal.
Okay, this question's from Greg. How can I justify solo 401k if I am a W-2 employee? If I sell items on eBay, how do I prove it?
Greg, if you're self-employed, I'm assuming your question is about eligibility. So you're looking to establish solo 401k plan, and your W-2 employee, which actually is irrelevant here. It has no effect on your ability to qualify for a solo 401k To qualify, you need to be self-employed or own a business and not have any full-time employees working for you. As far as selling on eBay, if you run that as a business, then you will report income that you generate from sales, and typically in this case it will be on a Schedule C as a self-employed individual. So consult with your CPA. Your CPA can give you more guidance on that, but again, as long as you have Schedule C that you report your business income there, you will be, that's going to be your proof.
Okay, next question here is from Anthony. I need to update my new address on my Solo 401k. What is the process to update it?
The process to update your address is very simple. Simply contact our team. You can submit inquiry on our website, or you can send us email at contact@SenseFinancial.com, and our team will take care of it.
Question from Wayne. How much can you contribute for your Solo 401k for 2024?
Well, Wayne, the maximum contribution limit is almost $70,000 for 2024 that you can contribute for a Solo 401k plan. How much you can contribute depends on your business type, your age, and the profit from the business, or net contribution, net compensation. The best way to see your numbers is use our contributions calculator, which is a resource available to anyone. You can go to our website, go to the Solo 401k section at the top menu, and then click on contribution calculator. You have to input just 3 entries there: your age, your business type, and then net compensation, and then the calculator will give you your numbers.
Okay, a question here from Joe. I have 2 properties. One is an LLC owned by the Solo 401k, and the other is an LLC owned by my wife and I. Can I switch the 2 properties? I would like to put the better performing personally held LLC into the 401k and put the 401k held property into my name.
Good question. I like your creativity, Joe, but the short answer is absolutely not. You can do that, and let me expand that a little bit. You're considered a disqualified person to your Solo 401k, and as a disqualified person, you're prohibited from engaging in any transaction with your retirement plan. So there is no such thing as swapping the properties. You cannot sell property that you own to your 401k. Your 401k cannot sell a property it owns to you. So absolutely not. That is not possible.
Okay, from Mohammed, he is looking for a CPA for filing 5500 easy.
If you wish to file a Form 5500 EZ and looking for assistance, let me just explain to you that as a client of Sense Financial, you've got 2 options. Number one, you can do it yourself, and we provide detailed guidance on how to do that. On the client portal, you go to the client portal, you then go to the maintenance section and click on the annual filing requirements, and the form and detailed step-by-step instructions are there. We tell you how to complete each field of the form. Then we can review the form for you, make sure it's done accurately. If you don't want to deal with this and you just want to outsource that completely, then we do offer a service for that. You can contact our team, and we can complete and submit the filing electronically for you with the IRS.
Next question is from D. Scott. Do you have recommendations for firms to value a LLC IRA?
IRA LLC requires annual valuation by the custodian. So you have to provide valuation to your IRA custodian every December, but the value of the LLC is based on the assets that are inside of the LLC. So if you have, and typically you don't need like an appraisal, for example, just for the annual reporting, because it's not a taxable event. So if you have a property, as an example, you can use Zillow value to determine the property value. Now, if you're taking that property as a distribution, in-kind distribution, or you're doing a ROT conversion on that property, then yes, you need accurate valuation of that particular asset, so you'll have to order an appraisal. If it's some other asset like a promissory note or a private loan inside of your IRA LLC, then again, you use the loan balance as the value of that particular asset. You don't need valuation. Now, if it is taxable event, then you may need the third-party valuation. So it really depends.
Okay, a question here from Robert. If I were to roll over a 401k balance to a solo 401k account to purchase real estate, all cash, and then later, would I be able to obtain a loan from that property to purchase another at a later date? Is this possible?
Absolutely, yes. So you can buy property using cash in your solo 401k, and then you can refinance that property, do a cash out refinance, pull that equity out, which goes back to your 401k, and you can use those proceeds to buy another property.
And a follow-up question on that last one. Would I be able to buy land with the loan obtained from a previous property in my solo 401k and then develop that land into rental properties?
Yes, you can use the loan proceeds from the property in the solo 401k to develop land. Just one caveat here is you want to make sure that you do not mix pre-tax funds with the ROT funds, or perhaps if there's more than one participant, you may have your spouse also participate. You don't want to commingle those funds. So you need to keep that in mind, and do not commingle pre-tax with the ROT. Do not commingle with your spouse's contributions, but it is possible to combine those funds. You just have to do it from the beginning, and you can use pre-tax funds together with your ROT funds, or possibly together with your spouse's 401k funds to make the investment. You just have to you have to keep the percentage the same.
Okay, a question from Kim. For 2025, can the full contribution from the S Corp be done in June 2025, or does it have to be done at the end of the year?
Great question. Yes, you can make a contribution mid-year, and you can maximize that. Again, it's based on your compensation. You can potentially even do it in January of the year. So with S Corp, contribution is based on your compensation, so you have to pay yourself salary. Elective deferral comes from the paycheck. So you can potentially pay yourself one large paycheck in January, and then maximize your contributions there. Profit sharing contributions will be based on your compensation. So again, you possibly can maximize that in the very beginning, but it is based on your compensation whenever you're processing that.
Okay, question from Craig. He is wondering what the difference is between IRA Trust and IRA LLC.
Good question, Craig. The difference between IRA LLC and IRA Trust is the underlying vehicle that is used to provide you with the checkbook control for your IRA. In case of an LLC, IRA LLC, it is an LLC, limited liability company. That is the entity that is established and registered with the state. It also provides you additional liability protection if you buy a rental property, for example. But in some of the states, California being one of them, is the most expensive to maintain the LLC. It costs $800 to maintain the LLC in California, and some people who wish to avoid that choose to use IRA Trust, which is not registered with the state. There is no franchise tax for the trust, so there is no additional cost for the trust. You get the same checkbook control. You're just not going to get the liability protection that is offered by the LLC.
Next question is from Jenny. Is the inherited solo 401k Roth account subject to the 10-year depletion rule like the Roth IRA? Other than the spouse having the exception, are there any other ways to avoid the 10-year depletion requirement?
Good question, Jenny. If you inherited a Roth Solo 401k account, then you need to establish inherited IRA. So it will be inherited Roth IRA, and you need to transfer that Roth Solo 401k account into inherited IRA. And inherited IRAs are subject to the 10-year depletion rule, so I don't believe there is a way to extend that. You have to follow this rule.
Question from Craig. The current IRA I want to transfer has stocks and mutual funds. Do I need to sell them into cash before I move them over to Sense Financial?
Well, Craig, if you're looking to establish a self-directed retirement account with Sense Financial, then I'm assuming you are considering some alternative investments and you need cash to do that. So if you want to buy a property, for example, rental property, you need cash. If you want to do a private loan and start private lending out of your checkbook IRA or a solo 401k, you need cash to do that. Otherwise, you keep the money where it is in your existing retirement account. So in that regard, yes, you will need a cash. But with self-directed solo 401k, you can have a brokerage account. So if you wish to invest in the market and buy securities, you can simply open a brokerage account in the name of your solo 401k. It needs to be specifically a specific account. So depending on the brokerage, we do have guidance for that. You can go to our solo 401k client portal, go to the setup section, click on the banking, and then you'll see about a dozen different brokerages that we provide links to their applications for a brokerage. Again, it needs to be a specific account that is a non-prototype. And yes, you can buy stocks and mutual funds with your solo 401k.
Okay, next question is from Kim. If I want to transfer my IRA funds pre-tax to my Roth sub-account post-tax in the solo 401k, is the tax calculated on the personal taxable income for the latest year, example 2024?
Kim, if you would like to transfer your IRA, traditional IRA, which is pre-tax, to Roth sub-account of the solo 401k, you can't actually do it directly. You got to do it in two steps. You can only do a rollover from like-kind account to like-kind account. So traditional IRA can be rolled over into a traditional or pre-tax 401k account. This is not a taxable event, so you can do that. And then as a second step, you can do what's called the Roth conversion. Again, as a reminder, every single plan that we establish with Sense Financial comes with the Roth provision allowing you to make Roth contribution, accept Roth rollovers, or do a Roth conversion. So this second step will be a taxable event, and it will not be based on the previous year. It will be based on the year when you do a conversion. So if you're doing conversion now, then it will be taxable in this year, 2025. At the end of, actually in the beginning of the year in January, your plan is required to issue 1099 form reporting that to the IRS, which is a reportable transaction, and then that will be added to your 2025 income, and you'll pay taxes in the year 2025.
Okay, next question is from Wayne. I have a solo 401k. I had my taxes done. They said I would only get a $12,000 tax credit for my contribution. I had tried to explain that I can get up to $33,000, but they would not let me claim that. How do I explain that better to my CPA?
Well, Wayne, I'm not sure I'm fully understanding the background of this question here, but the contribution to a solo 401k, the pre-tax contributions, they're fully deductible. So you should be able to deduct the entire amount that you contribute. I'm not sure what the limitation is. Perhaps you made a Roth contribution. So if you made a Roth contribution, it will not be tax deductible, obviously. But feel free to reach out to our office or to me directly, and this way I can clarify your situation and provide you the answer.
Okay, and our last question here is from Brian. We make private money loans to investors through the 401k account. My wife prepares the lending documents for each transaction and wants to be compensated. Is it a prohibited transaction to pay her for these services?
Short answer, yes, that will be a prohibited transaction. Your wife is a disqualified person to your solo 401k, so is yourself and your immediate family members, such as your kids, grandkids, and their spouses, your parents and grandparents. And IRS prohibits any disqualified person to receive any compensation from the 401k. Now, providing services is also prohibited unless it's just a basic administrative function. So I think doing the lending documents, again, I need to probably speak with you to tell you for sure, but you're probably okay there, but certainly you cannot get compensated for doing any work for the 401k. That will be a prohibited transaction.
Okay, those were all the questions, which wraps up our solo 401k and self-directed Q&A session for today.
Thank you. Those were fun. I enjoyed answering them, and we'll see you next time.